GST in India versus other countries. Goods and service tax is taking India by the storm. GST will bring in one nation one tax to unite indirect taxes under one umbrella and facilitate Indian businesses to be globally competitive. The Indian GST case is structured for efficient tax collection, reduction in corruption, easy interstate movement of goods etc. France was the first country to implement GST to reduce tax evasion. Since then, more than 140 countries have implemented GST, with some countries having dual GST, for example Brazil, Canada etc., model. India has chosen the Canadian model of dual GST. The US, the only major economy that does not have GST. States enjoy high autonomy in taxation. France, the first country to implement GST in 1954. Today 160 countries have GST/VAT. Most European countries introduced GST back in the 1970s-80s. China completed value-added tax, VAT, reforms in 2016 to replace its conflicting business tax system. Doing away with business tax and other taxes and switching to VAT has contributed to bursting of the Chinese real estate bubble. China also has partial GST on some goods. Japan introduced consumption tax in 1989 at a rate of 3%. In 1997 this increased to 5% and Japan went into recession. In 2012, Diet doubled the tax to 10%. Later the Shinzo Abe government delayed tax increase until April 2017. In 2016, a second postponement was announced which pushes the increase to October 2019. Malaysia implemented GST in 2015, after debating for 26 years. Consumer confidence nosedived, inflation went up, anti-GST protests in capital Kuala Lumpur. After initial hiccups, things have settled down with 70% respondents reporting business grew in last 12 months. Australia introduced GST in 2000, implementation smooth, peak GST rate was 10%. It now plans to increase GST rate to 15% in New Zealand. GST in New Zealand was introduced in 1986 at a rate of 10%. The rates were changed twice, minus 12.5% in 1989 and 15% in 2010 in a move to mobilize higher revenue while removing distortions in the tax structure. Singapore introduced GST in 1994. Inflation spiked and NGOs, social activist groups opposed GST. Today inflation has eased and GST is the second largest source of government revenue after corporate IT. Brazil, VAT is the substitute for GST, though levies vary from 17% in Sao Paulo to 18% in Rio de Janeiro, and rate of interstate supplies within Brazil vary between 4% and 25%. Canada introduced GST in 1991. Has dual model like India, state and central GST. But Canada gives options to provinces to go for state or central GST. 3 provinces sued the government over GST. GST created price distortions. Among the most recent are Seychelles, Congo, Gambia, and Malaysia, all of which have implemented GST in the last 5 years.